All right, welcome everyone to the Tuesday evening, March 10th, Trade Findings and Adjustments. And in all honesty, I am going to show you tonight the secret of trading. If any of you wanted to do what I do, if any of you want to manage your own money, if any of you want to consistently be profitable over a period of time, this is what you do to be a successful investor. I'm going to make it as simple as I can for you. In all honesty, the market is stacked against you. Yes, no, maybe so. If you agree with me, type in a yes. There are 18 of you here. If you think the market's stacked against you, type in a yes or just a Y. And here they come. 1, 2, 3, 4, 5, 6, 7, 8, 9. 10. I've got a true. Ooh, Rich says no. I've got one that says no. Well, unfortunately, you buy a position and you have a 1 out of 3 chance to make money if the position goes up. If it's sideways or down, you lose money. 1 out of 3 equals a 33% chance to be profitable. If you trade only options, you have a 1 out of 5, chance with, again, 1 out of 3, you have volatility, you have time decay. With volatility, time decay, theoretical data. So you actually have even less of a chance. But in the end, each one is responsible for his actions and also is spilled with the actions of the rest of the market. So no place to cry. Love it. Agree with you. So the short answer is, what do you do to beat the market odds? And really it comes down to, for us, collar trading. We have a position that makes money when the stock goes up. We have a position that makes money when the stock goes down. We can change those odds to a 2 out of 3. If you do time decay, you can still put it up at like a 50-50, possibly 60-40 if you're willing to cap your upside profit. So in a general form, the reason why we collar trade in some way, shape, or form is to be able to add shares with long puts, not lower cost basis. The key to all of it is to add share with long put, and I should probably say long put profits. So let me like italicize it and underline it and highlight it. Boom. That is your key. I would suggest, and most people that do in education, 80% is in collar trades, 10 to maybe 15% in spreads, which means 5 to 10% of it's in cash. This is the reason why averages in the stock market are bullshit. Ida, I apologize for swearing in front of a woman. And Maud, if you are here, I apologize as well to you. But let me repeat that one more time. This is why averages in the stock market are bullshit. Because if you lose 10%, it requires an 11% return to get back to break even. Because if you lose 20%, it requires a 25% return for you to get back to break even. If you lose 30%, it's a 43. If you lose 40%, it's a 67. If you lose 50% of your portfolio, it's 100% return on those current positions that are down 50% to get back to break even. And if you lose 60%, it's 150% return. I tell you this all the time. If your portfolio gains 50% one year, loses 50% the next year, or vice versa, you lose 50% one year and gain 50% the next year, you have a 0% return. But your portfolio is down 25%. Your $1 gains 50%, it's up to $1.50. Loses 50%, it's down to 75 cents. Vice versa, you lose 50% at the start, your dollar's down to 50 cents. It gains 50%, you're up to 75 cents. Anytime I hear someone brag about a percent return in their portfolio, that is your first red flag that they truly don't have a clue how to make money. They're just bragging about 1 year, and that never equals a long-term portfolio return or portfolio growth. What am I trying to say? What am I trying to teach you? Why have I talked about for the last 4 weeks looking longer term? It really comes down to understanding why it's important to make something up on the way down so you don't have to move as far up down the road. Now, if we were looking at collar trading, it's usually easiest and it maximizes positions to have 1,000 shares. I'm going to go over share counts in a bit and the rule of 300. But if you were to purchase $100 per share cost on a stock, 1,000 shares, you'd have $10,000. All right, am I back now? Looks like I should be back. Sorry about that. Had a little loss of my internet connection. I hate Alpine, Utah. It sucks. Okay, so thank you. So let's bite open a long put for earnings. Roughly 3 months out in time. Someone tell me, what is that going to cost us? 5%, 6%, 4%, 7%? I'm letting you guys tell me. It depends on how volatile your stock is. How much does that cost you on your option position? Okay, I'll agree with that one. First person that typed something in said 6%. So we buy a $100 3-month out in time long put for $6,000, right? Next person, tell me, how much does our stock lose? How far down do we lose on our stock position? Anyone can type anything in. Of course, you had to make it difficult. So we lose 35%, like Boeing, Ford, Apple, Bank of America. Whatever. So our stock loses 35%. Now, of course, give it to Lance to stick it in between here, right? So our stock is worth $65,000 or $65 per share of stock. Sounds like it just went through our last 4 weeks. Let's put it that way, right? Looks like Boeing right now that we have the right to sell at 32 for a while, 29.5, right? Most people that are in a mutual fund or a fund of any kind, an index, an ETF, when you're down 35%, what do you have to do to get back to break even? If you're down 35%, what do you have to do to get back to break even? Come on, guys. You're somewhere in here, right? So it's really about a 50-ish almost. It's more like a 48, 49% return, right? You got to sit and wait on a 35% drop. You got to wait for like a 48.5% return to get back to break even. That's kind of your option, right? On the flip side, if you have that long put, it will be worth at least $35,000. You might have some time value. I'm going to go ahead and I'm going to say that if the long put value is $38,000, you have the opportunity to add more shares. So what I'm saying is there's still about $3,000 of time value. Maybe this happens the first 4 weeks or 6 weeks. So you still have out of that $6,000 that you paid for that put, you still have half of the time value available to you. Why is this important? If you take out the cost of the long put, you have you have 32K in profit. Now, if you don't add shares and the stock gets back to, I don't know, let's say 100,000, right? 100K, you will have $132K, or a 32% return on investment. Just the way it is. The key, the secret, the reason why you need to add shares comes down to these figures. It's simple math, but here's your secret. Here's your secret that you guys just told me, right? That you guys just told me. $32K divided by 65, because it fell down in price. 32,000 divided by 65 is equal to 492 shares of stock. Can I make the assumption that you find $65 times 8, that you find $520 more, or out of that 6,000 that you bought your profit with, you add 8 more shares, another $520, 65 times 8. Yep, that you found $520. You add 500 more shares of stock to your position. You now have your 1,000 shares plus your new almost 100% paid for 500 shares, and the stock takes off. We're going to work on a little bit of math. 1,500 shares at $75. Actually, I want to go 80. Let me go 80. 1,500 times 80 equals 120K. Your stock is still down 20%, yet you're up 20%. In fact, your break even in this, in all honesty, your break even is at $71. At $71, you have just as much money in this position as you did when the stock had a value of $100. 1,500 at 90. 90 times 1,500. Ooh, it's now 135K. More than if you just lowered your cost basis. And 1,500 back at the $100 price is equal to 150K. You now have a 50% return while everyone else is bailing out of their position just to break even, to spend, my gosh, 2 years maybe in a position to have nothing to show for it but stress, heartache, sorrow, frustration, and they're out breaking even. Oh, thank God I didn't lose any money. You just wasted 2 years in the position, and human nature gets them the hell out of it at a break even. For 2 years, you might have just spent all this time frustrated and bugged and, going through hell to not make a dime. Does it really work in real life? I have a client generous enough to tell me, can I show you what I've done over February of 2019 to March of 2020. Freeport McMoran, 400 shares, bought a married put, took the puts off, had enough money to add another 100 shares. Buy to open more puts, take them off. More money to add another 100 puts. Hey, you know what? Sometimes you didn't get it all. In real life, sometimes the market sucks. Up to 6, another 100 shares with put profits after having a couple that didn't make money, right? If we keep going through all this, you'll see that over the last year, with numerous puts trying to go through, he's got 400 shares more. This gentleman, working through all of this, has doubled his share count of Freeport McMoran. When it all comes down to it, his 800 shares that total cost him $8,132 on shares that are down significantly from his purchase price of $14.60. If I can just go to where it's at today, and I know it's going to be a little different than this, so please don't hold it exactly, but let's do Freeport McMoran. Down at what? Closed at $9, right? So a stock that's closed at $9, when this one last had its last amount, so to speak, it was closer to 11. But a stock that was 11.13 on the last purchase price, bought at 14.60, 14.60 minus 11.13, down $3.47, divided by 14.60. A stock that's down 23.76% when this was taken care of on the 20th of February here. A stock that's down 23.76%. This gentleman is up roughly about 20%, 25%. This is the power of the collar trade. So this is the power of the collar trade. Now, tarde, huh? Now, a collar trade involves stock ownership, involves long puts, involves short calls, and involves any combination of those three. You want to make more money? Follow technical analysis. No reason to have bearish positions on a bullish stock. You're coming up to earnings a couple weeks before volatility kicks in. You want a cheaper price on your protection. Make sure you've got your puts on 2 weeks before options expiration, going out about 8 weeks. 10 weeks out in time is a great position for a long put. Don't have a short call in place when you have a 10-year run on your bull market. Don't get caught capping yourself And then if you continue to protect yourself, you won't make any money. Kevin, today my collar trade sucks. Have a little longer term perspective on your portfolio. No one's ever asked me, so what's your annualized return based on one day? That's stupid. That's dumb. They ask about what your annualized return is. And I've got two of you, one that is pretty interesting here, one that's a little frustrated with me, and one that's not so much anymore. Had to call both of them and say, you know what? We're over leveraged in Boeing. We're not going to make a 20% return. But both of them that have Boeing shares, I've got $70 of opportunity or profit in Boeing. I showed you yesterday. I've got a huge opportunity for both of these people to more than double our shares on Boeing in this past year, to go from 300 to 700, to go from 500 to over 1,000. I love it. A 50% drop and we're picking up 100% more shares of stock. When you do the math, over 100%, when you're doing the math, if it gets back up to 400, we're looking at like a 200% return. Kills 20 to 24% in annualized return. It kills it. One position will make the whole portfolio. If you ask he's here last year, I think it was Visa and Baidu, made the year in the portfolio, pushed us up above and higher. Apple could do it. Ford and Under Armour have done it for little accounts in the past. Under Armour freaking at $28, all the accounts under $100,000 killed it because we kept adding shares. American Outdoor Brands Corp and Ford down at $6. What an awesome opportunity to be adding shares and to see these suckers come back with a vengeance, just up to $10 or $12. This is the power of the collar trade. This is why we do what we do. This is why, even though you have the opportunity to do all these spread trades, if you were collared right now, protective puts in some way, shape, or form are working that way, that's where your huge opportunity is going to come from. Are there any questions about what I'm going over here tonight? Again, if we're looking for a new trade, a strangle straddle, especially if our stock market goes down tomorrow, notice we have one big up day, one big down day. Strangle straddles on the SPY or the Qs are what you're going to look to start to move into. I will email this group. If I look at a trade tomorrow, I will email you where I got in at and what I was looking at so you'll know. But are there any questions? Kevin, is the majority of your personal account collar traded? Yes, again, that 80-10-10 rule, 80-15-5 rule, 70-20-10 rule. Yes, the bulk of my longer term account is collar traded. I do have a shorter term option account that's getting its butt handed to it right now. But yes, if you truly want to grow your account, longer term retirement accounts, collar trading is the way to go. Good question. I don't see any other questions coming in. Let me get this posted. I hopefully this gives you the numbers to understand what we're doing and why. This is why collar trading is so important. This is why, even if it doesn't work on a yearly basis or a 2-year basis, this is where I'm going to beat the market average handedly when things come back. Guys, have a great evening. Ladies, I appreciate you being here, and I apologize for a couple swear words there. This is the beauty of what you're able to do to truly grow a small portfolio of 25,000 in over up to 386 in a 6-year period of time. This is the advantage of doing what we do. I may have a question here I missed. Collar trade number of shares acquired in the metric is raw percentage profit. What is yours? I just told you can take 25. You can actually take an $85,000 portfolio to over 400. It all varies, Ida. It really comes down to I'm not a fund, so as I have certain portfolios of mine and other people's, there are different kind of returns that you get. One more thing, I told you the rule of 300. Good question. What was the rule of 300? Plain and simple, you need at least 300 shares to expect to add shares when collar trading. So quite often, a stock will lose 25 to 35% of its value. If you have only 100 shares or 200 shares, at 200 shares, you need it to lose 50% of its value. Typically, shares of stock don't lose 50% of their value at an earnings event. If they are, you're not in a good, fundamentally sound company. So more often than not, a share of stock will lose 25 to 35% at an earnings event. At 300 shares, it might have to lose 25% twice to add another 100 shares, or 35% once to add that extra 100 shares. Really, to maximize commissions, 1,000 shares is best. If you can add 500, you can still make that work because stocks lose 20% of their value all the time. 300 is your bare minimum, and it's tough. It's tough to collar trade with 300 shares or less. Not that it's impossible, but if you are, you've got to be patient because it's going to take time. And sometimes people don't have time. I know Kiva's dealing with a client right now that, boy, guys, hear what's said, don't hear what you want to hear, and please don't expect these smaller portfolios to just make $1 million. In real life, it doesn't work that way. I appreciate you being here tonight. Again, ladies, I apologize for my language a couple times. Felt like I had to make a statement, and a couple of another questions just came in. Let's see here. So, good point. So, Kevin, what happens if a stock goes sideways or goes down for 2 years? So the short answer is, like the one we just showed you, it is possible to beat the market if it goes sideways. That's what this was right here, or down. But it takes time. You might have to wait more than a year to get the returns you're looking for. We're at the stock market's mercy. There's no way I can tell the stock market, well, dang it, I collar traded and crying out loud, I got my protection on. You've got to go down, you got to go up. It just doesn't work, right? It's patience. Be patient. Let things come back. Be patient. Let things go sideways for a bit or down a little bit. Anything you make up on the way down is profit on the way back up. So the key on a sideways to down market, anything you make to the downside is profit when stocks come back up. And this is what takes the guesswork. As I told you, I'm probably not going to nail the bottom. Let's be honest. If I do, it's 100% luck. But I'm nibbling. We added shares on Ford today. We added shares on American Outdoor Brands Corp today. I'm looking to add shares on Marathon Oil today for some people. It's a challenge. In real life, it's a challenge. You see someone that tells you the stock market's easy, man, rip off their arm and beat them over the head with it, because you know they're lying. You're at the market's mercy to a degree. Thank goodness, you know, we're not taking 50% drops on Boeing and 35% drops on Bank of America and 50% drops on Ford. We're making up that downward movement. We'll buy the dips. That's what we do. We'll buy the dips. Is it time now, Ida? I think so, but I'm making small bites. I'm really making small bites. And already big update today, but the futures today look pretty bleak. Our futures for tomorrow, probably going to go through a down day again tomorrow. Great up day, didn't make up what we lost the other day, you know, 2,000 points down. But looking at the futures, already down 340 on the Dow, 48 on the S&P. NASDAQ, we're down 148. I mean, in all honesty, we're looking at giving up a third to half. We're going to open up giving up half of what we made today. They're going to be down. They're going to be gone. Kind of ridiculous. But yeah, in all reality, big up day. People are going to take those profits. We're going to have a big down day tomorrow, most likely. Glad we didn't take all of our protection off. Glad we didn't take all the puts off. Glad we adjusted and still had stuff in place. I'm still not ready to take all protection off to go through a weekend. Be a couple weekends. I'll make sure I have at least some leap positions in leap positions, some long puts in play, or some bear put spreads on the indexes to protect myself through a weekend. All right, guys. Hey, I appreciate your time tonight. I'm going to get this recorded as quickly as I can. Looks like I'm going to have to cut out just a little bit of a stop there where we had my internet junk up on me. Appreciate your being here. I hope this is helpful. I hope this is giving you guys some understanding of how to weather this market and become profitable on the other side. Until Thursday morning, which will most likely be Kiev, I hope. Have a good day. Look in your email tomorrow if I decide to go some strangle straddles so I can show you guys exactly what I'm doing. I'll take some snippets. Just a way to make this up and down movement. I want to start capitalizing on it. I want to make some money on it. Guys, take care. Have a great evening. Talk to you on Thursday. Bye-bye.